Hey, it's Lewis here and welcome back to the channel, and in today's video I'm going to be analysing Adidas stock. I'll be using TIKR terminal to go through the financials, and then I'll be putting the numbers into my analysis checklist to see if the business is of good enough quality for me to be interested in. After this I'll be putting the free cash flow into my DCF and we'll come to a fair value of their stock. Let's get straight into it. What Adidas? So Adidas AG is a German multinational corporation founded and headquartered in Bavaria. The company itself designs and manufactures shoes, clothing and accessories, and it is the largest sportswear manufacturer in Europe and the second largest in the world behind Nike. So the company itself actually owns an 8.33% stake of Bayern Munich, so that's a fun fact. And yeah, so the company itself is traded in Germany, that's where the company is based, and it is a component of the DAX index. So the DAX 30 is like the German version of the FTSE 100 or the S&P 500. So they're quite a big company in terms of for Germany anyway. So now let's have a look at the sales for Adidas, and we'll start with the sales per business, and it's broken down into three different sections. So for 2021, footwear made up 53%, apparel, so like clothing, such as this Man United top, 41%, and gear made up 6%. So that's probably other bits and bobs, let's be honest. Sales per region, so EMEA, I'm guessing that means Europe, 31%. United States makes up 23%, China makes up 22%, Asia 10%, Latin America 7%, Germany 6%, then North America 1%. I'm guessing that North America means Mexico and Canada, something like that. But yeah, quite split over the world. There's not as much in the United States as I thought there would be, but a lot in Europe, as you would expect, because it's the biggest sportswear manufacturer in Europe. Now let's take a look at the TIKR financials for Adidas, and yeah, as always we will start with the income statement. And yeah, 2016, what did they have? About 18 billion euros. 2021, 21 billion euros. So over that time span they've grown the sales. Interesting to see though, it was growing the sales pretty nicely, nice and steady up until about 2019. 2020, COVID year happens, big drop expected, and we're slowly recovering from that. So yeah, you'd like to see them get to 2019 levels in the next few years and just continue that single-digit growth. Would be pretty spot on if they could do that. Next figure, net income. So we want to see the net income figure go up over time. Just a general figure I look at on the income statement. Yeah, it's going up. So apart from the blip, it's going up. So that's a win-win. Another figure I like to look at is share count. I want the share count to go down over time because this benefits me as a shareholder. It's the best way to allocate capital if they can buy shares at a cheap price. Ever so slightly reducing the share capital, not by much, but at least for doing it. We'll take it as investors. Balance sheet time. Quick look at the cash on hand. Yep, going up. Little thing I do like to see. If the cash balance is generally going up over time, yeah, it's a good thing, of course. Debt time. So long-term debt. Yeah, so this is going up a little bit. What's the current portion? So yeah, they've taken a bit of debt on over the past few years. So maybe 2020 they took a bit on to get through COVID, etc. But yeah, you want to know why this debt's been taken on, and hopefully over time this gets reduced, because you don't want them too levered, because it adds massive risks to the business. Return earnings up over time, profitable, so yeah, you'd expect that. Next, cash flow statement, and cash on operations minus capex is free cash flow, the most important figure when looking at stocks, in my opinion. Just a generalisation, cash from operations is going up, apart from the blip, so that's a win-win in my view. Capex is relatively similar, it doesn't really, yeah, it's quite similar, let's be honest. The odd little up or down, but capex is quite, there's not much capex really. So cash from operations goes up, capex is the same, free cash flow goes up, so that's good. Next few things to look at. So repurchasing shares, we know they've been buying back shares. Dividends, so I've increased my dividends over time. Up into 2019 they were. We must have stopped dividend in 2020. I like that. We were obliged to pay a dividend if they didn't have the money. And then boom, back in 2021. so happy days. But also the ratio is probably my favourite bit of the financial statement. It tells me more of the story of the business. Returns on capital, look at that, absolutely solid. I like to see 15 plus. Apart from the blip, it's above 15. I like this company already after that figure. Gross profit margin, you want this to be going up over time, of course, or staying similar, but just not going down, and it's doing that. Net income, high single digits / mid single digits, apart from the blip. Yeah, decent stuff there. Then you want your free cash flow margin to be similar as well, and it pretty much is. Current ratio, you want it to be above 1, and it is consistently. Cash conversion cycle below 60 doesn't meet this, but it's maybe in an industry which it can't meet it, unfortunately. Then debt to capital, you'd want this to go down over time, but as we saw, we've taken a bit of long-term debt on, so this has gone up, which does make sense. But you don't want this figure to get any higher, in my view. You want this to be going down from here. So yeah, that's the ratios, but if you're interested in TIKR, head to the link in the description below. You can, fantastic website for analysing companies. The data is absolutely fantastic. I'm loving this so far. So yeah, if you click the link below, I'll get a bit of a kickback. You can support the channel that way. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's have a look at the genuine impact ranking system and see where Adidas ranks in terms of quality and value. So let's start with quality, and in terms of quality, it's ranking very high, 681. On all metrics, it's looking good. So profitability, financial strength, capital allocation, very high, medium, very sound. No complaints there, let's be honest. But on the value side, it's looking medium, so it's not looking expensive, not looking cheap. It's looking about come see, come sa, in the middle somewhere. Income statement medium, balance sheet expensive, cash flow statement medium. I think the debt is making the balance sheet look expensive, but that's just a gut feeling. Historical growth, it's looking low growth, as we've seen from the financial statements. That makes sense. Free cash flow to equity is high though, so a lot of cash flow coming off this business, which we love to see. As you can see in the top left corner, it's got the shield around it, which basically means it's one of the highest quality businesses on the platform. So yeah, if you're looking for a high quality business, Adidas could be the one for you. Now let's have a look at my analysis checklist for Adidas, and yeah, we will start with the first pillar. So return on capital, 5-year average is 20%, absolutely solid. This is very, very high, and it's consistently high as well. Apart from the blip in 2020, lovely stuff. I like to see above 15, so this is a clear win-win for me. Something which I love to see is return on capital. It's such an important role in stock returns over time, so this is a very important figure and I'm loving it. Gross profit margin, solid figures. It meets my demands. But then the net margins, free cash flow margins don't. But this is an industry thing. Nike are very similar, Adidas is similar, I'm sure Puma are similar as well. Margins rarely go above 10%. So in terms of what I'm looking for, it doesn't quite meet it. But if it stays consistent, I'm happy. So it's maybe a bit harsh, but yeah, you've got to have some sort of metric I need to look at. Current ratio, 1.6. Very good, a lot of liquidity in the business. Cash conversion cycle is not below 60, but you can live with that. Total debt to capital below 50%. It just meets this at 40%, but you wouldn't want this going up anymore. Let's just say that. Hopefully we start repaying that debt. That's something I'd like to see personally. Then yeah, profitability to grow. Yeah, just revenue. I think if COVID didn't happen, it would be, absolutely smashed the revenue growth, but only just, but it's in the green still. And then the rest of it, net income growth, retained earnings growth, free cash flow growth is all there, so that's all lovely. I think capital allocation, I want to see what the company's doing with the cash to benefit the shareholders. Are they creating value for us? Long-term debt repayment, they've issued a bit of debt. You know, you can accept that a little bit, but they've bought back a few shares, not many, but we have gotten the dividend over time. So yeah, not too bad so far. I mean, good acquisitions. In terms of this, I like to see a company not impairing lots of goodwill, because that's just bad over time. It just means bad acquisitions. Doesn't look like Adidas makes much acquisitions, so maybe a bit harsh being red, but I've got to have a metric for it, so it is what it is. Then buy at a fair price. So what we're looking at here, so P/E ratio 24, price to free cash flow of 13. That's low in my book, especially with the market average. So it looks like earnings are suppressed somehow, and free cash flow is cheap. So yeah, interesting, especially when we'll have a look at the DCF for 10% return, 9% drop from the current share price of €181. 9% drop is not far off, so it's on my watch list. I've got an alert on, and we will see what happens over the coming weeks. But then yeah, we'll look at the DCF now, and yeah, free cash flow estimates from marketscreener.com, and then yeah, 10% return, 2.5% future growth rate after the first 3 years, and yeah, we're coming about a share price adjusted for net cash of €164. So yeah, like I say, 9% drop. Looks like a very interesting company, and yeah, it could soon get into my wheelhouse of a 10% return. So obviously I want a little bit of a margin of safety on that if I can, but if it gets into my wheelhouse, I may be very interested. So there we have it. That was my full stock analysis for Adidas. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.